Bees, welcome back to my channel, guys. So on today's video we're going to talk about the mistakes that first time investors do. Okay, I don't want you to go through what I've went through, because at some point I was a first time investor and I did these mistakes. Okay, so let's get on with it. So the first mistake is investing with your emotions. Please do not invest when you're sad, when you're happy, when you're confused, when you dealing with all these emotions, because you're gonna end up making a really bad decision. Okay, whether you should sleep on it, do your research, make sure that whatever the decision that you're gonna come with at the end of the day, it's based on facts, it's not based on emotions. Okay, let's not invest with our emotions. Okay, so the second mistake is putting all your money in one stock. That one, I keep on talking about it each and every time, because people still do that, and I don't know how much I have to stress that. Please stop putting your money in one stock, because imagine that you put all your money on MTN, and then this pandemic happened and 2020 happened, and you're gonna lose a lot of money because MTN has been doing bad for a longest time. Imagine that now you don't have money, you don't have other stocks to rely on, just MTN. So you see why you need to diversify. So rather diversify your portfolio, put your money in commodities, especially gold is really good right now. You'll thank me later. Put your money on commodities, put your money on real estate, put your money on bonds, mutual funds. Just, diversify, man. Don't put your money in one basket, like they always say. Put your money everywhere so that you know that you have diversified, and by the time the stock market decides to crumble, or the money market decides to go its ways, you know that you still have other stocks that you can rely on. Okay, so the third mistake is investing short term. So most people think that when you go into the stock market, investing in the stock market, it's a get rich quick scheme, like all these advertisements that I see about trading. If you're thinking like that, stop it immediately, because you're not gonna make any money at all. Because the stock market, it's all about long term. You need to put your money away for a long time for you to gain capital gains, to have the dividends that you will get from the companies that you invested in. So thinking short term and investing short term is not going to make you money. Stop it. If you are thinking of investing short term, it's not going to work. So rather invest long term, even if it's 5 years, 2 years, 3 years. Just don't take your money and think that in 3 months time you would have gained a lot of money, like all these advertisements that I see about trading, that you can triple your money within a week or within 24 hours. That's not how it works. It's not get rich quick scheme. You're not gonna make money when you're thinking like that. Okay, so the fourth one is investing in something trendy. So the problem with investing in a company that is trendy, mostly that company is overvalued by the market, or sometimes when the demand is really high, that means that the price is going to go high as well, because a lot of people want it. By the time you will be buying that stock, it will be really high, and you won't even be looking at its intrinsic value. Because if you're going to invest in a company and invested when the company's price is higher than its intrinsic value, then you are really doing a big mistake, because that price is going to go down, and by the time it goes down, you're going to lose your money. So make sure that you don't just follow trendy companies or trendy stocks. Make sure that you do your due diligence. And the fifth mistake is first time investors, they take risks that they do not understand, and they end up losing a lot of money, because they thought that, okay, fine, this company is going to give me a 60% return within a year, then I'm going to take. But you don't understand the risk that comes with high returns. So please invest in something that you do understand. Easy Equities has made it really easy for us. There's a test that you take for your risk tolerance. Rather take your risk tolerance and see where you are before you can just say, okay, fine, I'm going to take this company because it has a 60% return or 50% return within a year, but you don't understand that the risk that comes with the returns. So please invest in companies or stocks that have your risk tolerance. Okay, and the last one, which is not a mistake but an advice: please do your due diligence. It's really important to know the company's financials. Look at the company's income statement, balance sheet. I always talk about all these things. Look at the company's intrinsic value, the P ratio, the EPS. All these things are really important into making a decision whether to buy that company or not. So yes guys, that's all that I wanted to talk about, and I will see you on my next video.